The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, everyone. Happy Friday, TGIF. Welcome to another edition of Breakout Investing on TFNN, 877-927-6648. That is the number to use if you want to give me a call, talk about this market. Breakout Investing airs 5 days a week on TFNN from 3 to 4 Eastern. It's available as a podcast on iTunes if you can't listen live. And another cool way to listen to all TFNN programming is with your smartphone. Just plug those earbuds in. Open your smartphone browser first, type in tfnn.mobi, and then you just click Listen Live. There's a button there that very easy, very intuitive. So that's a good way to listen to the show. And don't forget about Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live. It is archived on Channel 13. You can look at charts live right along with me on Tiger TV. And if you want to watch Tiger TV on your handheld device, you can do that too. Just open your smartphone browser again, type in TFNN.com over on the right-hand side of the homepage. Click the box with 3 electronic devices in there, and it will recognize what kind of device you have and start streaming right on your phone. All right, Dow looking to make it 6 in a row today. Let's check in on the Dow Jones Industrial Average to start off the show here. Trading in the top half of its range, up close to 51 points right now to 14,380. See a nice little breakout for the blue chip index. Recently, check in on the S&P 500. We'll see it is once again trading in a pretty tight range up here, trading near its session high, up close to 6 points to 1550. Call it 1550 on the S&P 500 and the NASDAQ Composite. Also turning in another strong session. It is up 5 out of the past 6 days here, up close to 11 points to 3243. 3243. 877-927-6648. Let's go to Vic in Michigan. How you doing today, Vic? Hello, Vic. Dropped. Well, Vic wanted to talk, it looks like the VIX. See what the VIX is up to today. CBOE Volatility Index. You know, really, I've always say about the VIX, I don't talk about the VIX that much. It's just, it's an index that can move 15-20% in one day. You can see the massive move the VIX made here in late February as the market has been going higher and indices breaking out to new highs. The VIX has been under a lot of pressure here. You can see over the past, 9-10 trading sessions, after hitting a high just over 19, it is right now trading at 1267. So coming into a low here just above 12 that it set back in February. So some are saying the VIX may be ready to bounce here, but we will see. So the CBOE Volatility Index today down 3% with the indices higher, the VIX up 3% to 1267. Hey, the Fed did more stress tests on the nation's biggest banks. This is the third stress test conducted since the financial crisis. 17 out of 18 banks passed. Of course, a lot of the naysayers out there are saying that these tests are too lenient, but they are meant to see the results. 17 out of 18 pass means that most of these large banks would survive a severe recession and a crash in the stock markets. Just after the results were released, Citigroup actually asked for the Fed's permission to start a $1.2 billion in stock buybacks through the first quarter of 2014. Let's check in on shares of Citigroup here. See Citigroup working on 6 up days in a row. Tremendous rally for Citigroup recently, up another 3.1% today to 46.41. Financials in general doing okay today. Let's check in on the XLF. You can see it is up a nickel here at 18.24, only up about 0.3% on the day. Goldman Sachs at last check was under quite a bit of pressure, and it's down 2.3%. Some good juice behind the downward move today. Goldman Sachs down $3.62 to 153. Apparently, based on the parameters of the test, what was known from these stress tests is that Google would lose about $25 billion in trading losses under the terms of the most recent test. But some of these big financials like Goldman Sachs, Morgan Stanley, J.P. Morgan, they have big trading operations. They're particularly vulnerable during periods of market softness, whether it's a recession or stock market sell-off. So not surprising to see that Goldman, J.P. Morgan, Morgan Stanley, their results weren't great. They did pass, but because of the big trading operations that these banks have, they're the most vulnerable during a recession or market sell-off. So Goldman Sachs under quite a bit of pressure. J.P. Morgan Chase down close to 1% to 50.19, and Morgan Stanley MS not too bad, down 13 cents to 23.09. Did have some M&A news today. Private equity firm KKR. This is a publicly traded company. KKR. This is private equity firm, up 20 cents today. See the massive move by KKR after a breakout late last year, or right around the turn of the year, earlier this year. Breakout over, call it 15, has run up to $19 a share, up another 1.1% today. News here is that it is buying industrial pump manufacturer Gardner Denver GDI for $76 a share. The deal values Gardner Denver at around $3.7 billion. KKR bid $75 for Gardner Denver last month. So this is a sweetened deal. Shares of Gardner Denver up 1.1% today to 74.70. More job cuts at Google's Motorola mobility unit. The company is reported is planning to cut as many as 1,200 jobs, or more than 10% of its Motorola workforce. So we'll check in on shares of Google, see what's going on there. And Google gaps up earlier this week on Tuesday. It has been under pressure, not by much though. It has been a big leader in this market rally. Google right now down 0.3% to 830.11. So that's a look at Google. We got Herbalife has started to bounce off its lows here. News here, Carl Icahn still battling here with Bill Ackman. Carl Icahn upped his stake in Herbalife to 15.5%. Shares of Herbalife today up 1.1% to 41.47. So that is a look at Herbalife. Mentioned the Dow earlier. There's one Dow component on the move today. Shares of McDonald's. McDonald's making a real nice move here. Has been a great outperformer. Nice gap up today, up 1.5% to 98.55. They came out with same-store sales for February. On the surface, the numbers weren't very good, but they were better than expected. So it's not like the market was expecting much. Global same-store sales down 1.5%, a little better than expected. In the U.S., same-store sales down 3.3%, a little better than expected. And Europe, a little better than expected, even though same-store sales fell 0.5%. So McDonald's having a nice day today. And also Texas Instruments has been a tremendous outperformer in the market. You can see the steady uptrend that the chip maker has been on. Late Thursday, the company raised its first quarter earnings and sales guidance. And You see, the stock really isn't moving much on the news, but you have to think a lot of good news has been priced in here. Texas Instruments down 5 cents to 35.15. If you look at a chart of the Philadelphia Semiconductor Index, not surprisingly, looks a lot like the Dow, Nasdaq, S&P 500. You see the stocks recently cleared resistance at 433.93 and working on 4 straight up days. Will 2013 be the year for chip stocks? Too early to say, but Citigroup came out with a note today after Texas Instruments raised its guidance and seems to think that this could be good news overall for the chip sector, that TXN raised its first quarter guidance. Big news of the day was the jobs report earlier today. Non-farm payrolls in February up 236,000, well above the consensus estimate of 165. January jobs growth was revised lower to 119,000 from 157, but December revised higher to 219 from 196, 219,000 from 196,000. Unemployment rate down to 7.7%, a 4-year low, but once again the decline was due to a lower participation rate. Participation rate dropped to 63.5 from 63.6. That's back at a low that was reached last summer. Basically, the participation rate measures, people that just drop out of the workforce. They're still unemployed. They're not looking for work anymore. That is what the participation rate is. So when we're seeing these declines in unemployment, just by the way this data are calculated, a lower participation rate actually lowers the unemployment rate. I know it sounds silly, but that's the way it is. Back when the economy entered recession in December 2007, the participation rate was 66%, so about 2.5 percentage points higher than where we're at right now. U.S. dollar index, big rally in the greenback today. Last trading at 82.66, the index up about 0.7%. And April gold settled at $1,576.90 an ounce, up $1.80. And for the week, up 0.3%. April crude oil settles at $91.95 a barrel, up 39 cents for the week. Nice gain, nice weekly gain for crude oil, up 1.4% for the week. Checking on shares of a couple of stocks in equipment makers in the oil and gas sector. Want to check in on Dril-Quip here, DRQ. This is a stock that we mentioned on yesterday's show. Still technically looking pretty strong here. Last trading at 83.57, working on a weekly gain right now of 3.3%. Good supporting action at its 10-week moving average. Remember, Dril-Quip makes offshore drilling and production equipment, and also another stock in the group, industry group, peer of Dril-Quip would be Cameron International. Same sort of technical action here. Right now, Cameron trading at 65.51. It's up 4.2% for the week. A nice bounce off the 10-week moving average. And so it's a look at a couple of equipment makers in the oil and gas sector looking pretty solid here. Headed into break number 1. We'll be right back, folks. Stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. Mentioned a couple of equipment makers in the oil and gas group, Drillquip, DRQ, and Cameron International, showing good technical action, strong fundamentals as well. Last name in the group acting pretty well here, Chart Industries, GTLS. This is a company that makes equipment that's used in the production, storage, and use of hydrocarbons and industrial gases. You can see trying to break out of a big long base here that started back in, call it March, April 2012. But you can see the stock under a lot of accumulation last week, trying to get going here, trying to break out from a big long base, but Chart Industries showing some pretty good action here as well for the week, up 3.2%, last trading around 80.10. How about these bond yields? Let's check in on the 10-year note here. See, it's got quite a winning streak going and an actual breakout. When you look at the yield charted on a daily chart here, you can see 5 up days in a row. Yield on the 10-year note now at 2.06%, and the 30-year bond here also sharply higher today, 3.25%, also working on 5 straight days of rising bond yields. So that is that. Had some several earnings reports to take a look at today. Cooper Companies, volume very strong here. Ticker COO. This is a company that makes contact lens. That's what they're mostly known for. A smaller part of their business are surgical tools, but earnings up 10% to $1.23, 4 cents better than the consensus estimate. Sales pretty good, up 16% to $379.8 million. That was nicely above the consensus estimate of $366.3. Company gets about 80% of its revenue from its Cooper Vision segment, the rest from surgical tools. But Cooper Company making a very bullish move today. The stock is up 3.6%. I think I have a chart in here already of Cooper Companies. There it is. See the stock today up 3.6% to 108.48, and a fresh breakout here over a swing point of 105.75. So big buyers in Cooper Companies today. And how about Workday? Mentioned Workday yesterday towards the end of the show. Volatile stock, but a recent new issue. This is a company that came public in October at $28 a share. Let's see if we can get a chart of Workday. No, we can't. Bear with me here. Well. Let me see if I can just get for people watching on Tiger TV, well, we're going to have to check back in on stockcharts.com because it looks like that website is done. So let me just pull up TFNN.com here in the meantime. Sorry for that delay, folks, but having a little chart difficulty. But anyway, Workday yesterday in after hours was down about 3%. Sort of lukewarm guidance from the company, but they do human capital management and finance software. Again, IPO in October at $28 a share. They lost 19 cents. The estimate was for a loss of 20 cents. Sales very solid, up 89% from a year ago to 81.5 million. That was almost 4 million above the consensus estimate. Subscription revenues up 105% to 59.6 million. Revenue guidance again for the current quarter mostly in line. For the full year also in line. So investors may have been expecting a little bit more, but shares of Workday at last check having a very good day, up $1.63 to 63.26 after hitting an intraday low of 59.62. So nice recovery for shares of Workday. And here we're going to pull up Workday again now that I have my charting service working again. Pull up a weekly chart here, and you can see a nice, beautiful breakout. Initially broke out last week, didn't make a whole lot of progress, but you see for the week here up 9.5%. Last trading at 63.06. So this is an early stage breakout for Workday. Definitely one to keep an eye on. And finally, well, I'll tell you what, we'll wait on Pandora, talk about Pandora when we come back from the next break. Folks, don't forget to check out 30 days free of Ultimate Growth Stocks, a 30-day trial to my Growth Stock newsletter. You can do that right on the homepage of TFNN.com. Just click on the newsletters tab and then investment newsletters, 30 days free. Check it out. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Quick check on the markets here. About 25 minutes left to go in Friday's session. Dow right now up 60 points, 14,390 last on the Dow. S&P 500 also having a good day, up 7 points to 1551. NASDAQ Composite up close to 13 points to 3244. So we are in an uptrend here. That's a good thing. You know, going through screens in recent days, not seeing a whole lot of actionable information or actionable opportunities. And you know, when you look at the Nasdaq's rally here, let me go ahead and pull up a chart of the Nasdaq Composite in Tiger TV, and you know, you see a market that has been pretty much straight up off the bottom since mid-November. You had a couple of times where the market came down for 5 or 6 days. Pretty sharp correction, and then boom, it just started heading higher again. And what that has done is it really hasn't allowed stocks out there to form good, solid bases for a period of 4, 5, 6 weeks. Normally, when you get a market pullback, a consolidation, I mean, the markets are just so much faster these days, and sometimes the pullback that we just saw, when it looked like the bottom was going to fall out here, again, that was a 4 or 5 day pullback, and then boom, you got your follow through earlier this week. And trend is upward, but just not a lot of base breakouts here. I mentioned some of these stocks pulling back to their 10-week moving average, which is an okay place to pick up a stock, but the ideal spot to pick up a stock is when it's breaking out in heavy volume from a good, solid base. Now, Workday, again, last week broke out of a nice base, so there have been some, but overall, they're the exception, not the rule, and that's just because the market has not, pulled back or consolidated gains for any meaningful amount of time. That makes it hard for stocks to build a proper basis. So we're currently long, I believe, 5 names right now in the Ultimate Growth Stocks model portfolio, and if the market continues to act well here, moving higher in expanding volume, pulling back in light volume, not flashing much in the way of sell signals, we'll look to put money to work, but you got to be very, very discerning. Sometimes there are very bullish charts out there, but technicals aren't all that great. And a good example of this would be MasterCard. Let's take a look at MasterCard. This is a good example of what a base looks like. MasterCard basically been moving sideways since the beginning of the year. This is what a classic base looks like. The daily chart shows good supporting action at the 50-day moving average. When we look at the weekly chart here, let's take a look at MasterCard. You see, several weeks of tight closes here, but what you have is a classic late-stage base. So even though the technical picture looks pretty good, fundamentals look pretty good, the base looks fine, mostly tight closes. This is a late-stage base, which means the stock has already made a monster move. So MasterCard is a late-stage base here. Even if it does break out, it's just not a stock that really interests me because of the tremendous run or the tremendous price move it has made already. Back to some earnings announcements here. Pandora having a great day. Gaps up, now up close to 18% to 1383. Actually hit an intraday high of 1470. They lost 4 cents a share. That was a little better than the estimate for a loss of 5 cents. Sales up 54% to 125.1 million. That was slightly better than expected. CEO Joe Kennedy is stepping down. He's been CEO since July 2004. Remember, the internet radio company recently announced plans to cap free mobile listening to 40 hours per month due to rising royalty rates. That still seems like a pretty good deal to me. I love listening to the radio on my cell phone. Sure does eat my battery a lot, but 40 hours a week is still quite a bit of listening. So anyway, Pandora, nice numbers, pretty decent outlook from the company as well. Trading near its low for the session, but still up almost 18% to 1383. We also heard from Thor Industries, THO. 2 tickers out there, THOR and THO. THO is Thor Industries. This is the maker of recreational vehicles. They also make commercial buses and ambulances as well, but Thor having a tough day. We're talking about the fact for several weeks the stock has been trading underneath its 50-day moving average. Typically when a stock falls below that 50-day line, especially in the heavy volume that we saw back here in early February, once it starts to live underneath that 50-day moving average, it can be a precursor to further price weakness, and that is what we're seeing today. Thor down 2.2%. to 37.59. Still seeing good bottom line and top line growth at Thor Industries. Earnings up 48% from a year ago to 37 cents a share. That was a penny below views. Sales up 24% from a year ago to 741.6 million. That was nicely above expectations after hitting an intraday low of 36.05. It's back trading near its high, but still, again, down 2.2% on the day to 36.05. 36.05 last on Thor Industries. Let's see who else we had from earnings today. Wanted to take a look. Not that many leading stocks in the retail sector, but we did hear from Ann making a nice move today, up 7.5% to 31.17. Numbers here. They made 5 cents a share, well above the consensus estimate for a penny. Sales were up 7% to almost $608 million. That was slightly below expectations, but you can see a lot of bad news priced into Ann here. Maybe just a relief rally here, but stock up 7.5% to 31.17. Also in the retail sector, we had Foot Locker. Investors did not like this earnings report, despite the fact that earnings up 33% from a year ago to 73 cents a share. That was in line. Sales up 14% to $1.71 billion. That was a little better than expected. Same store sales up 7.9%. The problem here is that Foot Locker's fiscal year ended on February 2nd, 2013. So that gave the company an extra week of business in the fourth quarter and the full year. So with that extra week, I think analysts were expecting bigger beats on the bottom line and top line. So as a result, Foot Locker is down 7.2% to 32.77. And finally, retailer Genesco, GCO. This is a footwear, apparel, accessories retailer. And let's see, it hit an intraday high of 62.52 and is now trading at 60.46, down 1.2% on the day. Take a look here. See what the earnings look like. Up 10% to $216 a share. Estimate for $212. Sales also up 10% to $796.7. That was about $20 million above the consensus estimate, but Genesco lower now after early strength. I want to take a look at some other names on our watch list. Remember, we're talking about looking for base building stocks here, stocks that are forming nice bases, and I would put Amazon in this group here. See a nice rally back above the 50-day moving average for Amazon, trading tightly over the past 3 days. Wednesday, Thursday, and Friday today. Only up 37 cents today to $274.25, but when we look at a weekly chart for Amazon, what we see is a nice base on base pattern taking shape. It's still a bit early with Amazon, but if this market really is as strong as it's trying to make us believe, then we'd want to keep an eye on Amazon for a potential breakout try from this base on base pattern. So would still like to come up and see it get a little bit closer to its recent high, which was right around 284, 285. But base building stock still, looks okay. Not really under meaningful accumulation yet. So we'd want to see more heavy volume gains here as Amazon builds the right side of its base here. And how about Abaxis? Remember we mentioned Abaxis on the show yesterday. Small cap name here, but outstanding technicals, actually. Nice little pullback to the 10-week moving average this week. You can see almost up 5% now for the week to 45.02. Company has a market cap of just under $1 billion, so it is a small cap. Average daily volume of only 140,000 shares. They make portable blood analysis systems, and nice looking weekly chart here on the thin side, but pretty nice stock here. All right, let's head up to Ottawa, Canada. Talk to Radesh. Wants to talk Celgene. Hey, Radesh, how you doing?
Hey, Ken. Happy Friday to you. Doing good?
Doing well. Same to you. Thank you.
Just a quick question on Celgene. It has acted pretty well. It's right now at 111.49. But the volume seems slightly on the lower side. So is that a point of concern, or what's your take on this one?
Yeah, I mean, the volume, I've seen so many low volume gains here. We're seeing a lot of these low volume gains. Actually, you never like to see a stock wedge higher in light volume. So it's a yellow flag. It's not necessarily a red flag, but it's a yellow flag. And volume was light today, light yesterday. Before that, not too bad. Had a couple of above average volume gains there. So, I'm not seeing any sell signals in this one. If you want to, maybe take a little money off the table at some point next week, I'd do that maybe on the first first down day where you start to see volume expand. But if it's a low volume decline, you could probably sit this one, because now, if I recall, you got into this thing initially and then added to it. Right. You added to it when it went over 102, 103, correct?
That's correct.
Yeah, so you've got a little bit of cushion to work with. I'd be patient. I'd be patient with this one. Yeah, it's moving higher in light volume. The market may be ready to pull back here a little bit, but just if the market starts to pull back, look at the nature of Celgene's pullback. If the market's pulling back in light volume, but you see volume and Celgene start to expand to the downside, maybe you can just scrape a little off the top and take some partial profits. But seeing volume in the market isn't that heavy today, so it's tracking pretty close to what we saw yesterday. But still looking okay for me. But it's definitely volume today and yesterday has been on the light side.
Great. And Ken, one more quick question on LinkedIn.
Yes.
It seems to be behaving well. I mean, it has pulled back, no doubt about it, but the volume seems pretty low. Do you think it's forming a new base, or is it just consolidating? It's a huge new move, So.
I mean, this is you'd have to call LinkedIn definitely the probably one of the strongest stocks in the market here. No question about it. So, similar to Celgene, past 2 days, yesterday and today, very very light volume. I would expect that this thing is gonna base and pause and catch its breath. But if you look at a weekly chart for Celgene, and I'm going to pull up a weekly in Tiger TV, it hasn't even started to base yet on the weekly chart. So, at this point, we're going to look for, just a down week. I would expect, though, that LinkedIn is going to be able to hold on to a lot of these gains, and if it does consolidate, what we're probably going to see here is just a flat base form where it really doesn't pull back more than probably 5% off its high and just move sideways from here.
Okay, great. Yeah, I mean, I was thinking of another entry point into LinkedIn, but at this moment, I'll just wait on. But the earliest new entry point you'd have here is if it goes like 3 weeks tight, which means that you'd have to wait and see where it closes next week and wait and see where it closes the following week. And if you start to see some weekly closes where it closes within 1% of its prior week's close, if it does that for a couple of weeks, then you've got a 3 weeks tight pattern in place, which is a bullish technical formation. That would be the earliest you would see. You would see the entry point, but if it doesn't do that, then you just want to wait for a little flat base to form, maybe 4 or 5 week consolidation, and usually there it won't correct more than 5-10% off its high. But this is one you'd want to definitely give some room, and I wouldn't be careful not to get shaken out if it pulls back 5% off its high. That would be completely normal, and let it base, and then you get another opportunity to buy it on another breakout. Great. And one last question, Ken. Also we had a confirmed rally. There are not too many stocks which is offering a buy point. Do you think is that this uptrend may not last for quite a long time? Or
that's a good point. I was just mentioning that as we headed into the last break. Pickings are very slim right now. I mean, a lot of people would like to see a little pullback for the market so new bases can form. So just because we're in an uptrend, I'm not throwing money left and right at new buys. I'm being very selective, and not a whole lot out there right now.
Okay, thank you very much, Ken.
All right, have a great weekend, Ridish. All right, folks, be right back. Stick with me. Breakout Investing.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
NASDAQ Composite trading up near its high. 5 minutes left to go in Friday's session. Right now, the tech index up 13.5 points to 3,245. S&P 500, wouldn't be surprised to see this index near its high as well, and that is the case. Right at its high, actually, up 7.5 points now to 1552. And finally, the Dow Jones Industrial Average buyers coming into this index late. This is going to be 6 straight up days for the Dow, now trading higher by 70 points to 14,399. So it looks like a good end to the week. For the market here, I wanted to check in on a couple of more names here. Name that many of you may not be familiar with, IMPV, a company called Imperva. New issue. It came public, when did it come public? I think it came public in 2011, at November 2011. I know it, the very first week it traded, it hit a high of 32 and a low of 22, closed at 26.40. But this stock has really been on a nice roll here. Small company, market cap of $900 million, but nice top-line growth in recent quarters. In its latest quarter, sales up 36%. Sales growth has been accelerating. I always like to see that. So fourth quarter sales up 36% to $31.8 million. And let's right now the stock is up 1.7% to $39.07. Let's take a look at a weekly chart for Imperva, and we'll see that this is a stock that is just trying to break out here over resistance at 37.71. It is above that now at 39.01, but to me still looks like it's within buying range here for a speculative play. This is a company that provides data security solutions inside of big data centers. So could be kind of a right place at the right time. They just turned profitable. They lost 6 cents a share in 2012. They're expected to turn their first annual profit this year of 19 cents, and then in 2014 they're expected to earn 49 cents. So big growth expected going forward at Imperva. One to keep an eye on here as it vies for a technical breakout. Also wanted to take a look at SLCA. This one's been a real monster. U.S. Silica Holdings. Now, when the market eventually does pull back and maybe it comes in 3 to 5%, something like that, want to see a name like U.S. Silica Holdings form a nice base here because it is extended after a recent breakout over 2150. But let's take a look at a weekly chart for this company, U.S. Silica Holdings. What they do is they supply commercial silica that is used in fracking, and the process of fracking involves injecting fluid into the ground at high pressure. What it does is it fractures shale to release natural gas, get it flowing more freely. But you can see the weekly chart for SLCA, recent breakout over 2150. It's extended now, but if it holds gains up here around 26, maybe it corrects down to 25, 24, something like that, you could see a new base form and give you another opportunity to get in there. But if you don't want to chase it up here. And also wanted to take a look as we put the finishing touches on today's show. Take a look at Value Click. Just love how this stock is holding its gains here for the week. This is going to be a 5% gainer for the week to 27.70. Digital marketing firm looking very, very strong after a recent huge move that you can see right here. All right, folks, I hope you have a great weekend. We just had some hail and snow here looking out my window in Southern California. Strange weather. Coming up next, the Tom O'Brien Show. See you back here Monday, 3 o'clock Eastern for another edition of Breakout Investing. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.